Obviously, your dad had been doing this for a long time, and it was in his blood and his heart and soul to do it. What are some of the lessons that your father taught you in regards to this profession?
Most important thing, the numbers tell a story. If you look at a general ledger, whether it is the balance sheet, well, more importantly, the income, the chart of accounts, the income statement portion, profit and loss, you see where the money's going. You see what it's being spent on. So you can tell your client, why is this number going so high? Why is, a person, if they have their own business, they will run some personal expenses through the business. And as long as you're not being greedy about it, the IRS is not going to really make that much of a noise about it. But if you start paying all your personal expenses through your business, then they're going to have a problem. Just like we talked about Social Security before. Person goes to collect, so I'm here to start collecting my Social Security. So they call up your file, say, okay, well, based on this information, you're going to be getting X amount a month. That's all I'm getting? Yes. But I had my own business for the last 30 years, and I paid taxes on all that income. You had your own business? Yes. You remember what type of a form you filed for the business? I filed the 1120S, the S Corporation. Did you take salary? No. Well, that's why, because Social Security is based on earned income. Salary is earned income. A profit from an S Corporation is not. If you just took distribution, yes, you paid the tax, but again, you didn't pay the Social Security portion. But now, the IRS, if they were to do an audit of that business while it's still active, and they see that you are really taking no salary or very limited salary, you're taking mostly distributions, they could reclassify those distributions as part of payroll. Now you have to refile your quarterly payroll tax reports, and depending on how much they're reclassifying, the penalties and the interest can be far worse than the tax. So the advice to a business owner is, if the money's there, draw the salary. I advise clients, if the money, when you're starting out, you don't have to draw a lot, but start drawing something, and as your business grows, your salary grows.
Right.
Remember, if you have a business, if you have an S Corporation, you're going to get two documents. You're going to get a W-2 for your salary. You're going to get a K-1 for your profit, your share of the profit. The big difference between the two is that the W-2 has withholding tax. The K-1 does not.